Today I'm going to do something that I've really been looking forward to for a while. I'm going to share with you my entire ISA investment portfolio that's currently standing at just over £100,000. Now the reason I want to make this video is complete transparency. It's the kind of video I wish I had when I was first starting out. I wish someone would have shared this information with me. It would have made my whole journey so much easier. And now I've reached this point, I think it's great that I'm in the position that I can share this with you guys. So I'll be documenting my entire journey, showing you guys the ups, the downs, and everything in between. And you can get an honest look into what it takes to build a portfolio. So first off, let me mention what this portfolio is for. Now I'm currently self-employed and I have been for the best part of 13 years. And of course, one of the joys of being self-employed is there is no pension. So I haven't got anybody matching my contributions to a pension and building up that nice lump sum. I need to build my own pension and put my own plan in place for when I do want to retire. Now my entire investment here is held within a stocks and shares ISA, just because I do like that ability and that thought of knowing once I retire, all my money is tax-free and I own it. Of course, in the UK there is the option to have a SIP and you do get some tax relief, but until I'm in that higher bracket, it's not really worth it for me. For me, having the flexibility to access my money whenever I want to is really appealing. And if I change my mind and I don't want to use that money for retirement, I want to invest in, say, property, I can take that out and I can do whatever I like. So my goal is to build up £1 million within this account. And I am going to document my whole journey right here. So far, this portfolio has taken me 3 years to build up. And it's actually the second time that I've saved £100,000 within a stocks and shares ISA. The first £100,000 I built up in ISA I used towards a house. The second is this one that I'm using towards a pension. So if you guys want to build up your own 100,000 portfolio or whatever your goal might be, make sure you subscribe and follow along because I'll give you some tips and tricks along the way. And you can see what I'm buying and selling and it might give you some ideas. And I'll also share with you guys some of the ways I've been able to make that kind of money to save in the first place. I've tried pretty much every way there is to make money online so I can tell you what actually works. So my portfolio is currently at Hargreaves Lansdown. I'm currently in the process of moving over to free trade, primarily because the fees are so high for me here, which I'll show you in a minute, and free trade seems like a really nice option. I have done a video on the best stocks and shares ISA, which I'll link at the end of this video. So hopefully in the next video, I'll be showing you this account in free trade. I also haven't yet invested the 20,000 available for this year, so I'm going to be doing that over the coming months. I'm just keeping an eye out for good opportunities and the right time to buy. So what might surprise you with my portfolio is you're not going to see anything like Tesla, Facebook, Apple, and definitely not GameStop. You're just going to see solid companies with genuine reasons to buy. And the second thing that's going to surprise you is my portfolio is made up of just 4 companies. It was 5 companies, but I've recently sold one. Now having a wide spread of different companies is great and it's a really safe option, but for me, I like to focus in on companies I've researched that I know are going to do well and going to get much higher returns. So with all that being said, let's dive into my portfolio and I'll show you exactly what I've got. So as it stands, my stocks and shares ISA is currently sitting at £101,318. So the first company in my portfolio is Aviva. Now if you're from the UK, you're going to have heard of Aviva as being an insurance company, but also they do a wide range of services across the financial sector. So with Aviva, I'm currently standing at £31,620 and I've actually made £11,690 profit. So that's a return of 58.6%, and I've made that pretty much in the last year. So when you compare that to the market that's done 30%, I've almost doubled the performance of the market on that share alone. So if we dive into Aviva over the last year, you can see it's been right down at 250p per share, and it's now at 406 pence per share. So that's a really solid increase. Now my approach to investing is very much value-based investing. So I'm looking for very solid companies with a reason they're down and a reason they're going to recover. So for example, here in the UK, we've had things like Brexit and we've had a lockdown, which has hit companies really, really hard. So I was looking for companies that have been a staple of the UK economy for a really long time. They've always been around, they perform really well, have been really solid, and thinking that they're going to recover over time. So that's the kind of approach I like to take with investing in general. It's called value investing. So I'm looking for a company that's really good value at the moment, that's kind of on sale, as you would say, that's going to recover or gain over time. Now the other thing I really, really liked with Aviva, if you look at their chart over 5 years, you can see how much they were down. So you can see they were really high here. They were kind of always sitting between 400 and 500 pence per share, and they got hit, like I said, really hard down to 250 pence, and they're slowly recovering. I still do think they have got room to grow, and I think they could come up to around 500 again, and that's probably where I'll look to sell. If I scroll down on this page, you'll also see the really cool things with Aviva. So you can see the dividend yield, which is really, really high, which is 6.64%. Now these dividend yields aren't always super accurate with these apps. You do need to do your research and see exactly what they are. and they can change from time to time. But overall, Aviva have given a really good dividend year on year. I don't choose investments in particular just because of dividends, because sometimes it can be linked to really slow growth. But that kind of bonus, you might as well take it if you can get it. So that gives me a really nice payout on top of my gains. They also have a really good PE ratio, which basically means the value of the company isn't that far from what they're earning. So they're basically a really good valued company. I'm not going to dive too much into the technical analysis on all these stocks because I will literally be here forever. But overall, they're the genuine reasons why I bought Aviva, and they seem to be doing a really good job of recovering. They're a really solid company with a really good team behind them. And I think even buying today, there's still more room in there to grow. So I think overall, they're a really solid buy. Now, another company I had recently in silver were Barclays. Now, they were the same principle, a long-standing UK company that I thought was going to recover. I made around £6,000 on those and I've swapped them. They've actually still gone up in value since I've sold them, but the reason being was I wanted to diversify my portfolio. Now, although on the surface you might think Aviva are insurance and Barclays are a bank, they're actually quite linked. Aviva actually offer a lot of financial services, so they're both kind of in the UK financial sector. So I wanted to sell that to diversify. Now let's move on to what I think is the most controversial part of my portfolio. Now the next two shares I own are both within silver. So I've gone for two really solid silver miners. The first one is Hecla Mining. Now the reason I bought miners instead of buying physical silver is I want more movement in the market. As the price of silver moves, silver miners move even more. So it's kind of more of a high risk, high reward kind of scenario. Now the reason I bought these silver mining companies is because there is a chance the stock market is going to crash. It will crash at some point, but when, nobody really knows. Now it's important to realise that if the stock market does crash, it will impact the price of silver. But silver is more about the reaction to the event. So silver will hopefully come up based on a stock market crash. The other reason I'm really interested in silver is because of inflation. So as lockdown ends and more people come out and more people are spending, inflation will rise. And if inflation rises, then so will the price of silver. If you want to hear more about silver in more detail, I've done a video exactly on silver, how it works and why I'm investing in it. So that's definitely worth checking out if you're interested. So within silver, I have Hecla Mining, which I've got £21,776 invested, and I'm currently sitting at a profit of £1,777. And as I said, that is quite volatile and changes daily. I've also got Pan American Silver, who are an even bigger company. Hecla are a smaller company, so they're going to move more. Pan American Silver are a much larger company, so they're going to move, but not quite as much. So with them, I've got £7,799 invested, and I've made a profit of £413. So I'm looking at about an 8% return and a 5% return so far, but I've not held them very long. I'm expecting them to do really well over 6 months and even more next year. So this is a problem I'm currently having within Hargreaves. So for example, if we take the Hecla Mining Silver share, and I go to deal now. So you can see I've currently got 4,800 shares with a value of £22,500. So if I go to sell those shares, so let's just try and sell, and we'll sell the exact number of shares that I have, and let's go place a deal. Now you can see the charges that I'm being charged to place this trade. So we've got £12 commission, which is fine. The FX charge is £143. So in essence, it's costing me £155 just to sell this share. So as you can imagine, that's really expensive to buy and sell on a regular basis, so it's not really ideal. So I'm going to move over to free trade. If you guys want to move over to, or you're thinking about somewhere else to go, if you register with the link below, you do get a free share up to £200. So that might be something worth looking at if you're in the same situation as me. Now the fourth company in my portfolio is Taylor Wimpey. Now Taylor Wimpey, for those of you who don't know, are a big house builder in the UK. Now the reason I invested in Taylor Wimpey, they're a really good solid company and they're really stable, and they were hit hard last year. And my thoughts were, if everything was down, they still need people to be buying houses. Now the government are going to be supporting house builders. So the government brought in some really great schemes last year to keep house builders on track, which has helped my gains even more. They've done things like extending the stamp duty bonus, so you can still buy a house up to £500,000 and pay no stamp duty up till June. There's also a lot of other benefits they've done to help house builders in general. And the truth is, people always need houses. So with Taylor Wimpey, I'm currently standing at £25,774 and I've made £9,259 at a 56% profit. The other thing I had quite recently up till yesterday was a HSBC Russian ETF, which basically tracked the top companies in Russia. That had a really nice dividend yield of 4.63%, and it gave me a nice mix of the top companies within Russia. Now again, I did this because of the stock market, and I'm kind of hedging my investments. So if the stock market crashes in America, Russia will thrive. I made about £500 on that one before I sold it yesterday. The other reason I sold it is I'm not completely comfortable with Russian companies. I don't speak Russian, I'm not up to date on all the latest news, and I can't read their company history. So for me, it's a bit of a wild card, and I thought, let's stick with something I know. So I've sold that recently. You can see in my account, I've currently got £14,348 in cash, which I'll be investing in an opportunity I see coming soon. So if I go to the main screen, you can see my complete portfolio breakdown. I'm sure you're quite surprised that I don't have many companies, but for me, I really know these companies inside and out, and I'm comfortable with my investments. If I was less comfortable, then I would recommend going with something like an ETF, which I'll be covering in a video shortly. Now the problem is with these types of investing apps, after a while it becomes really difficult to see what you've actually made. Now you might think it looks really clear on here, you can see how much I've made, how much I've invested, but actually it's not a really accurate picture. As I've bought and sold different shares, the prices have become very muddled. So what I've got is a rough spreadsheet of exactly how much I've got invested and where it's currently at. So let me show you that right now. So here you can see the spreadsheet where I track my portfolio and my gains. So as you can see, starting at the top, we've got the 31st of October 2018. Now that's when I started the account, but I really started taking it seriously on the 27th of May 2020. Before that, I was really just depositing and saving money. So since then, you can see I've deposited £55,000. You can see my total value then, which is £58,000, the gain and the percentage gain each month. So you can see that month by month. You can see how it started from 4% right up to where I'm at now, which is 54% on my gains. You can also see the points where I've added more money because I like to note them down. So the 1st of July, I added another 5k, 4th of August, another 5k. And at that point, I hit my deadline for the year. So I could only deposit the £20,000. Now I've hit the new year, I can add another £20,000, which I'll be depositing shortly. You can also see down on the side is the key events within my portfolio, which I like to note down. So you can see with coronavirus cure announced, there was a big surge. There was a second antivirus cure announced, which also gave it a big surge. And then most recently, we've had the budget announced in the UK, which was really good news for house builders, which has also boosted my portfolio. And you can see by just looking at it, the big jumps in gains. So for example, here we had 7% to 20% gains, and here 26 to 53. So for me, all I'm really interested in is looking at how much I've deposited and how much I've got. In between's really great, and it's nice to see how much you're making year to year, but for me, I just want to know how much I'm putting in and how much I've got. So I can see I've got 65,582 deposited. My total value is £101,318. My gain's been 35,736, and the percentage gain has been 54%. So roughly, if you were to take a look at this, you can see roughly here from the 12th of August to now, which is not even 12 months, I've pretty much made in the best part of £31,000, which is essentially someone's salary for the year, which is just incredible. Now I don't expect to make that every single year, but I will take that last year, and I think that is really fantastic. So I'm going to keep tracking this and see how my portfolio grows. And this is what I would recommend for you guys in how I would track your portfolio. Don't get too bogged down by the day-to-day, just keep a really general spreadsheet of what you've got and where you're at. Think long-term and think about holding your investments. If you want a copy of this, I'll link it in the Facebook group that I've got going, and there'll be a link down below. So overall, I'm feeling really impressed with how I've got on last year and how my account has grown so far. I'm really excited to add more money this year and see how far I can build this portfolio. I've actually just sold my property, so I'm going to have roughly another £130,000 to add to my portfolio. I've also got a small high growth portfolio, I've got a copy trade portfolio, and I've got a small crypto portfolio. So once I've got them all together, I'll show you a complete breakdown of everything I've got and how my kind of investments are split. I haven't worked out exactly how I'm going to invest the £130,000 so far, because I am looking to buy another property in roughly about 12 months. And I don't want to take too many risks with that, because if the stock market did crash, I could lose a lot of money and waiting a long time for it to recover to buy a house again. I don't think I would really feel comfortable if I sold at minus 40%. So I hope you guys have found this super useful. I've tried to be as transparent and honest and show you exactly what I've got and what I'm holding. And I will document this whole journey as I add more money, what I'm buying, what I'm selling. So make sure you subscribe and stick around for that. And I will see you guys in the next video.